when it was like at like 36 or something overnight. But today we have Paradigm, long-standing platform in the option space, and now a large volume block provider for Deribit. Go ahead and give a small introduction, and then we can get into the spaces.
Yeah, hi guys. So it's David here from Paradigm. I'm director of sales and head up the sales business in London. So Paradigm, Paradigm's an institutional liquidity network for trading crypto derivatives. So we're best known in the options space, where, as you say, we're about sort of 35 to 40. And basically, you can think of us as a OTC platform, but where the settlement layer happens at the exchange level. So it's our own liquidity. We've got about 50 odd market makers, 1,000 plus clients, all trading on our platform. And then we clear and settle via the exchanges. We're not impacting exchange order books. Any spread or multi-leg trades atomically settle. So you're never running any leg risk. So consequently, you can get much bigger size done on Paradigm. We have the best liquidity, the tightest prices, which is, I guess, what makes us the prominent venue and execution platform for institutions trying to trade crypto derivatives. We've also built the spread market within Delta One products. So again, you can trade spot, perpetual on a one-click spread, no leg risk, no sort of messing around on screens trying to work legs if you want to put on a carry trade. So on our platform, streaming order books, and you can execute spot, perpetual on a spread, one click, atomically settled, no leg risk. So that's kind of a large part of what we do. We also facilitate some of the dove auctions for Ribbon and Theta Nuts. Just again using our liquidity network to make that execution around those auctions more efficient, so that we're getting better pricing for the vaults themselves.
Nice. And then, Steve, you want to give yourself a little intro, what you do over at Paradigm?
For sure. Thanks. Hi, guys. I'm Steve. So I sit on our institutional coverage team, Paradigm. So basically just covering and working with existing clients. So doing everything sort of mainly on like the liquidity front. So like behind the screens, if they want to buy, 500 BTC calls and like they would RFQ it, or they could maybe ping me and ask like myself or someone on our team, like how best to do that. And so it's kind of like a combination of knowing where people or makers care on certain things or like where their axes might be. And then, just trying to best like pair people off, right? And just trying to think about things from like a sales trader perspective. As well, work with like David on our sales team and trying to bring new clients in or new institutions in. And just sort of like spreading the word and, speaking to like TradFi institutions about the space and, telling them like, hey, there's a real market here. Like you probably don't even know, but like, here's kind of what it looks like. Things don't trade 10 balls wide or whatever. Like there's actually liquidity, you can get size done. And here's kind of like what the insights are. And then also like I work with Joe Cruy on our team and, we're kind of like building out a bit of like a research arm. So we send daily commentary around the flows that we see, try to provide like as much color as we can and things that, will just sort of help like the flows make sense. Because a lot of times it can just be misconstrued, right? And so like someone might be buying calls, but it's like actually bearish, like they're closing them out or like people don't know and they'll just tweet random stuff. So we try to like help provide like additional color around things like that. So it's pretty much my seat.
Nice. And if you guys don't know me, I'm the Premia's in-house vaultard. I run the spaces every 2 weeks. I do some back-end writing for them and some consulting and stuff for them, whatever they need. And we got Tolga, DK, and Cozy from the Premia team. You get just a short intro, and then we'll get into it.
Yep. I'm DK. I cover operations and legal. Was in traditional finance for 10 years, more on less on the trading side, more on the settlement operational side. But I had been in the listed space, securities lending space, prime brokerage business for quite a while before moving into DeFi.
I'm Cozy. I handle BD partnerships now. I've been with Premia since the beginning. Prior to this, had more of a longer history working within crypto. I've been in crypto now for 6.5 years, I think now. Working from trading desks through non-custodial exchanges, wallets, and DeFi protocols.
And I am Tolga. I work on the quant and research side at Premia. My background has been about 15 years in traditional finance across execution trading in equities, market making, equity options, and systematic macro trading for my own fund for about 7-8 years, and then joined the crypto side.
All roads lead to crypto. Well, we just did our big surprise, 25 basis points. We have Jay Powell coming out in, 15 minutes or so. How's everybody treating this low vol regime? I think I've been pretty vocal about it since, the beginning of time. No, probably about the beginning of the year when we really got into selling vol in the crypto space. Before that, we were market making on the FTX products. I think we were like number 9 or number 10. I don't want to boast too much. I think number 10 on the D1, the Delta One side of the FTX stuff. And now, how's everybody? What kind of flows are you guys seeing on Paradigm? Let's say right now, has anything big come in since the move, or are we just kind of where we were at before? I've seen front end fall off. Basically, that nothing changed.
Yeah, it's pretty quiet right now. We don't really see the flows don't really get aggressive like right at the event. It'll usually be kind of leading up to, and then like there's always, it feels like a delay. Especially today with like everyone knew this, and now we have to wait till Powell speaks a little bit, so maybe later in the afternoon. But this morning, flows were like actually pretty bullish. Someone bought like 825 September BTC risk reversals, so buying the 35,000 call, selling the 26,000 put, and then there was like last night there was huge ETH March upside buying, so someone bought like 22,000 MAR 1900 by 2800 call spreads. So it's feels pretty bullish, but overall the flows have been fairly quiet just given like spot, so range bound.
Are these guys just looking at like a long-term Vega play, right? Like, if there's any convexity with this BlackRock, if there's anything that's going on with BlackRock, spot ETF approval, all of those flows will be deemed bullish. And are they just playing like the long-term Vega flow, or what are you guys feeling there? Because what I'm seeing right now is D-Vol's making a new low, 36 in ETH, and right now 37.9 in Bitcoin. Right after the announcement, of course, you always get a crush, right?
Mm-hmm. Yeah. I think from my point of view on this, and I've been writing about this quite a bit in the Macro Pulse newsletter that we put out for Paradigm. I think directionally the market is bullish. I think as the macro sort of changes, and we can get into that a little bit. But as the macro environment's becoming more constructive, as we kind of move past this hike cycle and into the eventual pause, and obviously probably the rate cuts that follow that, I think markets are generally sort of more bullish. And then obviously we've had I guess a positive sort of shift in the narrative following the BlackRock ETF and perhaps even the sort of Ripple victory as well. So I think from a directional point of view, markets are bullish and trying to play for that sort of move to the top side. I think obviously everyone as well is conscious of the halvening and that being another sort of bullish event. So I kind of think people want to position in the wings and have this sort of convexity for the upside. But at the same time, and to your point, I guess, Marty, is, it's also you're bleeding theta every day, holding these positions. So I kind of feel people want to almost sort of fund themselves some front end, and just sort of try and help pay the theta bill. But definitely, I mean, even the break low we failed to really break above the 31K in Bitcoin convincingly. We've had a bit of a pullback, but it's not disrupted the pattern of flow to our trades. And as someone who spent 18 years on macro desks in banks, and I always kind of look for, rather than one-off trades, what's the general kind of pattern of flows. And that pattern of flow hasn't really changed much at all over the last sort of couple of weeks. Still tends to be people wanting to put on top side and sort of longer dated top side. And then the front end, we get this noise, and maybe people trying to sort of fund that theta bill a little bit by sort of being short in the front end.
Yeah, I was talking with Tony Stewart. He does some stuff with, I don't know with you guys, but specifically with Deribit, just in the DMs. Nothing. He'll never get on a call, he says. So I'm trying to chat, but essentially it's like a crowded trade, right? Everybody's selling the front end garbage to fund the long term Vega play. I've personally been doing this for, I don't know, a little bit too long now, probably two months. I've been writing about that, and there's just no real catalyst. I mean, I don't know if you've listened to this show before or our spaces before, but I have a bet with Tolga on here that if Ivy hits the 20s, like 29.99, I have to stop trading crypto and go trade the shiny new toy AI or some stocks, and then I can come back to the crypto space once we're above 30. Right now, I don't know if we get that low. I hope we don't get that low, because it's going to be a sad crypto winter if we get that low. But right now, there's just no looking like there's not a catalyst tomorrow, right? The catalysts are all these future dated organic vol bringing events, the halvening, the election, the CTF approval. Nothing's. I thought maybe the XRP we would get a boost. Vols would pick up. Well, not really. It got hammered right back down. Nothing has been concrete and nothing's held. We've had a lot of noise recently, but nothing's held in the vol space.
Yeah, I mean, it's interesting, and I think to your point, like crypto, like all markets, are very narrative driven, and perhaps crypto more so than most, I would say. And the problem with the narratives at the moment, I mean, I was bullish and still am bullish, sort of crypto and risk generally coming into this year on this shifting sort of macro regime as we transition out of this, the most aggressive rate hike cycle arguably in history to the eventual pause and then the cuts that follow. So that kind of made me bullish coming into this year. So you've got this nice kind of macro story, and yet we're in this what I'd kind of term macro sort of purgatory, where we kind of want to be able to fully embrace this pause idea, but then the data's just kind of hanging in there, and so that we keep getting these extra hikes. Now they're not materially sort of denting risk, because again the rate of change now, it's another 25 bips isn't really here nor there given the move we've had. But we've still got this resilience in the data that's just stopping the Fed from kind of completely announcing the pause. I mean, Powell's up in a little bit in 10 minutes or so. There's no by saying, right, we're done now for a bit, particularly given where the data's been, even though they're probably pretty comfortable with the sort of trajectory of inflation, and that they've probably broken the back of that now. So we can't fully embrace the new macro regime just yet. So that's not giving us an impetus to really kind of ramp higher. And then even on the more sort of idiosyncratic crypto narratives, be it around the stuff on Ripple, be it around the ETFs. There's still stories that, okay, we're moving in a positive direction, but they've not fully been solved yet, that we can fully embrace that. So without given us that level of conviction, I guess, to really kind of start pumping higher, really kind of ramping up conviction and sizing up these trades for the top side. I kind of say that given now the impact of, I mean, we've spoken a lot before about in ETH, this massive call overrider that sort of riding calls and just really weighing on the curve. And then also generally now you've got a lot of these systematic overriding strategies that are just mechanical, right? They're not, the model tells them to do it. They're going to keep doing it. So in the absence of this more discretionary risk taking, then you're going to have these mechanical flows, and those mechanical flows are basically selling vol. So the consistent, indiscriminate flow is constantly going away, and unless you've really got a reason, then we just have this and lower in vol. And I know, Marty, I mean, great call. You've been riding that all the way down for most of this year.
Yeah, I've tried, right? It's just we can never time like when the vol regime comes back, right? So maybe all these big players, we're not that big, right? But we're a player. Maybe these guys are nibbling this long-term stuff just in case, right? We're at all-time lows, 36 handle, 30, let's say roughly 40 handles. What happens if we pop up to an 80 handle, in a week? Like how much losses? How many people are going to be liquidated and how many people on the short side are going to be absolutely screwed, right? I think we talked about that on your guys' show just last week, that the main ETH player got spooked essentially, right? He was, maybe you want to go into exactly what trade he had on, and then he covered pretty much instantly, right? He covered at a loss. Yeah. And then if he would have held overnight, he actually would have made money, or not overnight, but if he would have held 2-3 days out, he would have been in profit. Maybe you want to share some light on what that trade was.
Yeah, I think he covered roughly like 320K of Vega between July 5th and July 13th, I believe is what we're talking about. So July 13th was, not sure if that was XRP or maybe the day before, but that's just what I've written down on the sheet. But yeah, I mean, we saw like all this aggressive covering of like the MAR 2300s, the July 2100s, the DEC 2200s, buying to cover. So yeah, I mean, they were just short to the gills, and so any spike in vol is gonna, the mark to market just gonna crush them. So yeah, I mean, they're quite jumpy to cover. Trying to see if we're missing anything.
But this guy has been winning for like a year and a half, right? I've been sending some of his stuff to Tolga of some trades he's put on. We've covered it a couple times here. I remember in June, I guess, we were like, what the heck is this guy doing, right? June or July and September, and we're like, this doesn't make any sense at all, right? I forgot exactly what it was, but it just didn't make sense at the time, and it turned out he was wrong, so then he covered. I think he still made some money on it, but this one was like one of the first times that he was, quote, publicly wrong, right? Where he covered instantly, and if he would have held until the end of the week, he would have made some profits for sure. Tolga, you remember that the ETH player we were talking about a couple times ago?
I wish I could remember what sense we made out of it, but there wasn't much to it.
There was no sense. Yeah, it didn't make sense.
We couldn't quite piece it together. What they
We can't see the whole book, right? So
that's the other part. Yeah, we don't know the whole story.
Yeah.
I mean, they've continuously like sold the low, bought the high, like on these like local moves. It's like time and time, like throughout the program.
Yeah, no, they're not always right and they're not always wrong, right? But when, imagine it popped up to like a 60 handle or something like that, how much they would have been down, right? They would have been insane, right? It could have even wiped them, or they would have had to add margin or whatever, right? Again, we don't know the whole story on this side. David, since you're the macro expert in this group, what are we looking at until the end of the year? And when does this macro regime change? Because I think once this macro regime changes, that's near or is the point where we can say that the vol regime has shifted. I'm not sure if it's like right at that moment, right, that we get a spike, but that would be a time that I would start to not be short vol.
Yeah, sure. I mean, I think, I mean, again, a big part of my macro thesis this year has been this peak inflation, peak rates narrative that's going to be a kind of positive force. Certainly, I think the inflation side of that's playing out. We've had what I think 15 months now of sequential lower prints on inflation, as the Fed would like. And then rates are still certainly in the long end. You know, like 10-year yields peaked October last year, and you know we've had some moments where we've kind of revisited those towards those levels. But generally, you know, across the curve, we're seeing duration rally and yields there kind of peaked out. But I think I think those tailwinds are going to accelerate into the second half of this year. One thing that people seem to keep forgetting is the lagged effect of monetary policy, which typically acts with a 12-month lag. Now, we're only just coming into that 12-month lagged window, if you like, of where the Fed got really aggressive and started stepping up the hikes with like the 75 bips. So I think we're going to see over the next quarter, you're going to start to see the deterioration in the data sort of coming through. I think as well, like, you know, if people aren't looking at China, they need to be, because China's economy fell off a cliff. And actually, one of my risks, I guess, coming into the year to the view was that this China reopening, the potential kind of reflationary effect that might have if they have this reopening boom that we experienced in the West. Well, obviously, we haven't seen that. The consumer is still being super cautious. Sort of deflation, and they're really struggling to get the economy going there. But you know, as the second biggest economy and the biggest exporter in the world, you know, they're essentially emitting this disinflationary pulse across the Western world. And you're starting to see it now in PPI data. Like certainly in Europe, you know, you've got negative PPI. So you've got to think that the CPI is going to sort of follow that, if not into negative territory, sort of quite quickly lower. You're seeing the same sort of PPI. I think last month's print year on year was like 0.1% or something. Yeah, and these numbers are coming down from double digits a year ago. So I think the pace of disinflation is starting to pick up. And I think once the Fed see that, I think people are actually underestimating how quickly inflation is gonna drop. I still don't think we've really seen the impact of what the Fed have done. And you're going to start to see that over the coming months. So I think once we get that, and then you'll see duration rally. Like I'm expecting 10-year yields to drop sort of back sort of sub 3% over the coming months, as we start to then sort of price into a cutting cycle. So I kind of think that's going to be the big thing. But then also, I still don't think the banking sector stress has gone away, because the reasons that you know that were driving those stresses, i.e., you know, Fed rates being too high and higher money market yields, plus having, you know, a lot of these banks that are sat long treasuries massively underwater. Those issues haven't gone away. And actually, yesterday we had the takeover of PacWest. Perhaps a little reminder that some of these regional banks are struggling. And then you've got coming up over the next sort of few months, you've got commercial real estate loans that are going to need to be refinanced, and all of a sudden they're refinancing from basically when rates were zero to when rates are now up on a 5 handle. So yeah, I think there's a lot of lagged impact to feed through, and you're going to start to see that really kind of accelerate over the coming weeks and months. And then I think then I actually think the ECB is going to be interesting tomorrow, because their economy, you know, Germany's in recession, you know, they're seeing deflationary numbers in PPI, and some of the hawks there have kind of flipped a little bit more dovish. So you're going to see a pivot basically coming out of the ECB, and all of a sudden we've gone from this hike cycle to so I think they're going to be, obviously the Fed is going to be the most important one in that. And then what China do? China are going to just pump liquidity. That's, they've tried to, they've taken this piecemeal approach, but ultimately, when the patient's dying, they're going to resuscitate it by flooding everything with liquidity. So I think they're going to be like the positive catalysts that start to see us moving into a higher range. And I guess depending on how aggressive that move is in crypto, will be whether sort of vol starts to sort of really pick up. But we're definitely in this positive spot vol, correlation regime. So if we start to break into, say, in Bitcoin into like the 35, 40K type range, then I expect you're going to start to see volatility pick up.
And with you being in the UK, I mean, I know the UK isn't the largest player in the world, right? And they hit Brexit recently, right? So
Yeah.
their inflation's like going crazy, right? I mean, compared to the rest of the world, maybe, I don't know, you have Argentina and Turkey, or some second, third world country that's a lot higher, right? But the States is, I don't know, 3% roughly, 3, Brazil's 3 or 4, Japan's 3 or 4. Everybody's kind of in like this 3, 4, 5 range, and then you have the UK up here at 8. What are they doing wrong compared to everybody else? Since you're there, I mean, if you have any insight there.
I don't know if we're doing sort of too much wrong. I mean, central bank probably was far too slow out of the traps in terms of hiking. It was all very sort of cautious and slow. Maybe Brexit's not helping in terms of the supply chain normalization you've seen kind of elsewhere. Maybe that's been a little bit slower to feed through. We're also probably in the UK, have been more exposed to sort of gas and electricity prices, which I guess largely has been a function of the Russia-Ukraine war. So yeah, it's just sort of taken, I guess, slower to feed through. But my expectation is, I think we had a weak print the other day. I mean, we're still up at 7% or something. But I think now you'll start to see it come through as well. I mean, the impact of rate hikes in the UK, I think, will more aggressively hit us here, just given the structure of the mortgage market and the importance of the housing market to the UK economy, and most people here are on like fixed 2 to 3 year mortgages. It's not like the US where you've got like 30-year type mortgages. So a lot of those are starting to come due and need to be refinanced. Everyone's leveraged up to the yin yangs. So when they start remortgaging, there's going to be a lot of people that just can't afford those mortgages. So what's the first thing you do? Like you're gonna try and keep paying your mortgage. So you're gonna cut out all the things that you like to do. You're gonna stop going out to eat. You're gonna cut the gym membership. So I think quite quickly we're gonna see the UK in a pretty deep recession, and then the sort of rate cuts the price cuts will start to follow, and all of a sudden inflation falls pretty quickly. It's controversial. I get in Twitter spats with people, but and again, they've panicked, and they're worried about their credibility. So they're looking at each inflation print, going, "Shit, we need to hike more." But again, they're kind of forgetting about the lagged impacts of what they're doing, and just how quickly that will start to hit once you start to see the impact on the housing market. So I kind of think what they're doing right now is a little bit silly, because of course, you hiked 50 last month. It's not going to impact inflation this month. So we're still kind of working through that. But yeah, I'm concerned about the UK at the moment from an economic perspective. I think we're going to go into quite a sharp slowdown.
Yeah, like I said, right? Like the UK doesn't run the world, right? But since you're there, I just wanted to know if you had any insight. I wanted to ping off to Tolga if you were agreeing with what David is saying in terms of the US and global macro spec, or if you have your own view. Because I know a couple months ago, you and Froggy, or DK Froggy, somebody was all going back that the regional banks is a problem, regional banks aren't a problem. And I like to have a little controversy on the spaces. Tolga, are you agreeing with David, or are you not?
Well,
So one part I can say that I can agree with for sure, and I think it's very common knowledge, is just the lag period, right? And so there is an element of lag that you have to take into consideration, and understanding things when things actually have a material impact, and timing that, and then just knowing some other macros in specific sectors to understand where their pain points are, and sort of when they hit their inflection point of that pain. Um, all of that made a lot of sense. I think, though, I'm not, I just don't see us bringing rates down at an aggressive clip. I think that's the one thing that I'm maybe my viewpoint is more of a softer landing with rates, or other methods of mitigating problems that are more sector specific than just using rates as the fix all method to try to reverse things. To me, I don't see chairmen not understanding the fact that there is a lag, right? For them to not know that, it would be very shocking to me. So I think you have to imagine they're aware of that process and that problem. And so, do I think they have the answers? I don't know. I mean, we're going to be in a rock and a hard place very soon, right? So something tells me it's likely going to be other measures that are going to be used than lowering rates. I have a feeling it's probably going to stay a little bit more static over the next 6 to 12 months.
David brought up a good point about commercial real estate. It's been a little while since I looked at like valuations and the refinancing in that market, but from what I remember, a slight decrease in like the valuation of those properties, especially since like a lot of those properties were on interest only loans when they come due to refinance. The fact that like vacancy rates are, post COVID, have been, astronomically high, like in 10%, double digits. I think that when you bring up the bank, the bank parts of the economy, like are they still at risk? We'll see who's like left holding the bag on those loans, and like how many actually come due to like refinancing, and how many turn out to be like underwater. But that's not something that's going to happen like sharply. And I could see the U.S. government doing something to kind of put like a Band-Aid on that through the election cycle. But I think that's one thing that's going to be like one of the next big macro discussions. When something has to come to light. I think that it was something that came out 8 months ago, and that kind of settled down a little bit, and then let's see if it comes back up in the froth in the near term.
Yeah, whatever Jay Powell's saying right now, SPY loves it. It's up 0.5%. Oh my goodness, making touch on the top of the range. Bitcoin 0.5% doing nada, and ETH is, I don't know, 0.8%, 0.9%. Nothing super crazy.
Yeah,
no big surprise, right? Of course.
Yeah, no big surprise from what I just like saw on the ticker as we're on this call, was that he was just talking about how like obviously spending has been decreasing. So on the demand side of inflation, like a lot, especially on the West, a lot of that spending has decreased. And if you look at like household like balances, going into like 2022, we saw massive amounts of large cash balances in bank accounts. And throughout 2022, that just dwindled until it was, in bad territory. And so that now you're starting to see like the credit side of things starting to increase. And rates are already shit. So that's what one thing I was talking about, is that like we're definitely seeing like the demand side of consumption decreasing. Anyways, but no one's got cash to spend anymore.
They're not giving out those stimmy checks, dude. I had friends that work at restaurants in San Francisco making like 80 grand a year doing nada. Why the heck would you want to go back to work, right?
Yeah.
I think as well, like one of the things that, and it's funny. I mean, I should be careful. I started life as an economist, but one of the funny things that, like, when I speak to economists is, they kind of assume this kind of rational consumer, like, if you know your start to kind of average out your spending a bit, but people don't, right? You get the stimmy checks, you spend it until it's gone, you know, and then once that's gone, you then lump on the credit card until you've maxed that out. All the while that's going on, you know, the numbers coming in, like, you know, your consumption looks great, everyone's having a great time, everyone's feeling good. And then bang, it just all stops. Like, and that's why it's, you know, recoveries tend to be up the staircase, and then recessions it's kind of down the elevator shaft type thing. And yeah, and that's why I think these things are difficult to time, and probably particularly more so, you know, just given the, you know, the wild kind of fiscal policy, you know, and response we had to COVID. So it's probably pretty difficult, you know, to estimate when, you know, when those cash balances are going to run off. But you know, it will happen. And you know, I'm kind of, the one thing as well, I mean, I think we'll see a pretty sharp slowdown. I do think inflation, you know, is going to. I'm kind of probably in the, you know, from a longer term like thesis, I guess, in the disinflationary camp. You know, those drivers of debt, demographics, technology, I think will reassert themselves. So I didn't see anything structural change. You know, all these people saying that, oh, you know, we're back to the 70s structural style inflation. I'm like, well, not really. We just put a load of cash in people's pockets at a time when global supply chains were pretty messed up. So I think we'll drift back into this low inflation world. You know, the debt levels have got bigger now, so that kind of deflationary aspect is going to be even bigger. Sort of boom, you know, potentially that kind of is from a tech point of view going to be quite disinflationary. And then, you know, demographics is demographics. They're not particularly improving either. So I think we'll go back to that, but it's not a. I'm kind of like, you know, all this when we'll be in recession, not recession. You know, I don't necessarily think recession's a bad thing. We probably don't really know until we're actually past it that we were in it in a way. But yeah, for me, it actually makes me. I think we're a function of rates and liquidity. So the main thing for me is that, look, we're not going to be having this aggressive hike cycle. We're going to end up pausing. Eventually, cuts will come. How aggressive they come, how big that response is, you know, we'll have to see. But I think generally we're in, you know, we're actually going to be looking at a pretty positive risk environment, despite my view that I think the economy is going to slow. But you know, when you think of it, we hit record highs during the middle of a pandemic. So rates and liquidity, like, for me, dominate everything.
Sure, right. Everything's just a follower of USD liquidity, essentially, right? If there's more money being pumped, then you know, everything's going to go up. I was looking at, I don't know, just looking at the charts the other day, the COVID drop. I even had to zoom out to go see it. SPX was like 2,200 or something, and now we're at 4,600 basically. And you know, who's going to be the first guy to say like, "Oh, I told you so," right? Like, we're in a recession, everything's going to zero. I think it's going to be that dude who wrote Rich Dad Poor Dad. That's going to be the
Yeah.
that's going to be the guy that you know, is like, "I told you so," or Schiff, Peter Schiff with his gold thing. "Oh, I told you so. It's up so much."
Yeah.
Like, I mean, look at this. Devol's like 35 right now in ETH. Like, this is terrible.
Yeah.
Yeah, I guess we have a couple more minutes, 15 minutes or so. I wanted to roll into the current state of the TradFi markets versus crypto markets, in terms of options, liquidity. I know Steve mentioned that you guys are having to go out and say like, oh, there is a liquid market, right? There's not a huge spread that you have to jump across. How are you looking at traditional markets versus crypto markets, especially with traditional markets and the new shiny toy, the AI, just, you know, up and to the right, and crypto being nada, you know, flat.
I mean, Dow's on what, the third today will be like what, the 13th or 14th day of in the green. Yeah, right. It's an interesting time that the time that AI kind of came into play, because okay, we're increasing rates. A lot of groups, a lot of like traditional, a lot of normal businesses cut people going into 2022, right? So at the same pace we had AI, and at the same pace we also have something like 400,000, at least in the West, then in the US, 400,000 like retirees a month that are off the job market. So like unemployment remains low because like we're pulling all these jobs off. We're the the people that are looking for jobs it's quite their market right now. And then when it comes to any sort of like production losses or productivity, losses, I think the AI is going to be able to pick up a lot of the slack um, on the loss of those boomers retiring. But yeah, the market's been doing good. I think the theory was that Microsoft would bring down the market this morning, the Dow at least, and doesn't look like it.
Yeah, I mean, do you think that the AI planned this, right? Like,
Well, I mean, yeah, essentially.
right? Like all the algos planned this at the exact same time together, right? No, it's just an interesting time, like you said, right? Every major corporation was cutting people to make their balance sheet look better, so that's kind of why their stock was looking better, right? More buybacks, less people's employee wages, and then you had the AI, like, oh, this is going to be the future of everything, right? And you had this hype where everybody was playing with the Chat GPT, and I think that that's fallen off since. I'm not sure on how many active users they have now, right? But there was a huge rush for like H100s. NVIDIA was up, AMD's a little behind them.
Yeah,
But it was interesting, super interesting time right at the beginning of the year, right? I was public about buying some leaps on the AI. Everybody, it was like this froth, right? Your grandma was texting you like, oh, have you tried out this AI chatbot? And you're like, I don't think that that's the future, right? I don't think
no,
everybody wants to
yeah.
talk to Siri in their phone, right?
I'll tell you this, running like running a business is that sure the major hype was in Q4 of last year in terms of like, oh, what is the potential of what this could do, but now you're starting to see like you actually starting to see it on the line, right? So like we have a lot of our developers, ex Toga, who we gave them the talk in Paris, but a lot of our developers are already using Copilot, right, from a developer perspective. So like I would rather give every one of my developers Copilot, and then now they can produce like 30% more than than to hire a new dev. So like we're starting to definitely see the productivity gains there. I use it on a regular basis. I like build a bunch of cool stuff, at least for like market monitoring and sentiment and a lot of stuff I do on the side. But like you're starting to actually see like it it being implemented and the productivity actually starting to reach um, on in either software development or product development or even like marketing, and you're starting to see that like that come to fruition. So I do still think that from like an investment perspective, a lot of the spaces are super hyped. It's like peak SPAC time, like hyped. Um, but you're starting to see that trickle down of like it actually making a bottom line impact on productivity.
Yeah, this is going to be a whole new era. I think that like robotics and automation run factory lines and jobs that people don't want to do, farming, and people want to do them, right? But the majority of people don't want to do them. I think that you'll see an uptick in that. I'm not sure yet when you're going to replace, like, you're going to have Marty AI, right? You're going to have Cozy AI, and like the AI is going to run the spaces for you, right? I still think people like to hear our voice and hear our insight and talk to us, right? Not a bot, right?
Yeah, I mean, look at the trades right now, dude. Like, try to bring your car in for a repair. You're gonna be 3 months out. Like,
Dude,
all
I
the
live in
trades are.
Brazil, bro. Dude, don't worry about that, bro. That's your guys's. That's your Western world. That's your guys's Western world. I don't know anything about that. I don't know
Fair
anything.
enough.
The grocery store is full. Mangoes are $1 for a kilo. I know you guys don't know kilos, but $1 for a handful of mangoes. Gas is whatever, same price it's always been. But we never really felt this.
Human touch.
Supply chain stuff, right? We're not buying $100,000 GM cars with chips in it from Taiwan, right? We're buying, manual $10,000 Fiats and shit like that, right? So we never really felt that major supply crunch that the rest of the world was, or at least personally, I never felt it, right?
Yeah, I think there will always be a place for human touch. You could say, there's especially in like the finance industry, people want to have humans to talk to feel like they're safe and secure in whatever decision they're making. They don't want to trust a computer. I think one of the most frustrating things is talking to a bot and not talking to a human when you're trying to do something that involves your own money.
I will say, though, there is something about AI that does bother me as much as it's very useful. When people stop understanding, and there's two ways you can use it, I think. One is where you're using it to sort of supplement like the busy work and create infrastructure of like your code or your content and then sort of run through it and tweak it. And then there's the others who expect it to pump out like perfect output. And that's where it kind of gets funny because I could read content, that's AI generated, and you can start, especially when it's a topic that you understand very well, you can tell when it's just very fluff or it doesn't quite seem targeted properly, seems maybe overly generic. The word choices aren't exactly pertaining to what it should be saying. So there's different things you can kind of pick off quickly. I think it'll be interesting to see how good AI gets, but you can quickly read through and start finding content that's sort of AI generated. I have been able to kind of notice that, and I think if people lean on that too much, then they're not really going to check the content. If they don't check the content, then there's some potential accuracy problems. So I think,
100%.
I did read something yesterday or 2 days ago, and I was like, oh, this is a bot for sure. And then I went to go look at like when it was created, right? And the company's like, I don't know, 5-6 years, I forget exactly what it was, 5-6 years old. And this was wrote like last week. And I was like, oh, this is for sure a bot. Nobody writes like this. It's like, not even that it was like perfect grammar, right? Like a Harvard or a Stanford kid wrote it. It was just like you said, it was just like maybe not targeted correctly, or it was just a little Terminator, a little Terminator reader.
Yeah, but I think we're on the content gen. We're getting off topic, but on the content gen side, it's super generic. But like with like Llama 2 just came out like last week. Like we're getting some more like models at scale in which that we can take like good technical writings, for example, our white papers, right? And like feed that and use that to then train for better responses and more technical responses. Or we can train on the voice of someone. So I think that as these like tuning models become up to speed in terms of scalability and cost, and we're already seeing it, like I can tune a model for like $60 in compute and borrow a few GPUs for like 2-3 hours, and I can tune out a model that can talk in DeFi slang. And so I don't know, we'll get there eventually. We'll get there soon, but I do agree that there's something soulless about it, and the soulless aspects of all of our businesses are not going any. I mean, like the soul need, the soulful elements aren't going anywhere.
And that doesn't mean go short in the video, right? Like, I don't think that's the right play right now, especially when it's just up only. I don't know. We got a few more minutes. I wanted to just make a point that I almost bought some vols yesterday in Maker, some DeFi or some altcoin options, and a desk gave me a quote for like $85. I don't know, like 150 vol, and I was like, oh my god, I'm not. That's not gonna be my first trade on, right? 150 vols, and it's up like, I don't know, something.
Well, that's because
it's up 70% in 3 days.
You probably don't know the macro side of things or you don't know like the fundamental side on that. But like on the fundamental side of things, so Rune, who just sold like $25 million in Lido, is the founder of Maker, and he's been buying up all the spot Maker that's out there. So he's now out.
Yeah, there's a buyback. There's a buyback. That was my initial thesis.
Well, it's the founder. The founder has like 13% of the supply now because he just sold all his Lido for it.
That was literally the thesis. There was no other reason. The only reason was stock buybacks, Maker buybacks, and it's up like 70% in 3 days. And I'm kicking myself. And we could have had a rinse arena on the market makers, but anyways, guys,
toxic flow, Marty.
Oh, it was so good, dude. That would have been so good. That would have been
So
so
good.
good if I would have hit them. I haven't hit them up since January for anything, and the first one is just a rinse. Oh my, that would have been a good one. You guys have any questions for each other before we try to bring somebody up? There's not a lot of live questions. People don't like these live questions. DK, did we get any questions prompted from the AI, from our readers, from our users?
We got 3 minutes. I know that a lot of our users want to know about the StarkNet app chain implementation in the future, but I don't know if you guys want to touch on that or not. We can bring it up another time. But you
maybe we could do like another one in the future. We can touch on it. That'd be cool.
Okay. Sounds good. Do we have any questions from each other here? I appreciate you guys all coming on. And does anybody from the crowd want to come in? This is always like where everybody's a little scared. Go ahead, Steve.
What flows like DK, like Premia guys, or Marty too, I guess. Like, what flows you guys seeing on like the DeFi option side?
They're all vol based, man. Like, if there's no one, if vol's down, like we're not really seeing a lot of flow at all. So
yeah.
Like post Ripple, we saw like a good 3 day bump on volume, but other than that, it's been like we're just building because like there's not a lot going on the trading side.
And the other thing is it's like a different kind of user, right? It's more retail user versus institutional user for the Premia versus Paradigm user, of course. And when it's against like an AMM, right? You're only here for these retail flows or these high vol flows, or I don't know, Solana Summer, DeFi Summer, right? Everybody wants, I don't know, OP calls, Solana calls, all this other stuff, right? ETH calls, Arbitrum calls when there's unlocks and things like this. But in terms of the day-to-day flow, you don't have this market maker slanging balls, right? All day you're trading against this AMM. Yeah, so I think when V3 comes out, it's going to be a new hype. I don't know if you wanted to touch a couple more minutes on V3, and then we can wrap it up.
No, I mean, I think anyone that's following us knows V3 is incoming soon. We're going to have to push back the date a little bit to probably mid-August. But that's the only announcement I really have. We're going to spend a few more weeks making sure that our RFQ and everything is up to snuff. All the documentation, we have like code snippets that people can copy pasta if they want to easily connect to our RFQ end of things. But we're just going to take a little bit of time. Like vol's low, trading volume's low. There's no rush for us to push things out the door. But it's between the last code reviews post our audit, and then we'll be spinning up mid-August with not permissionless at first. We're just going to spin up Bitcoin, ETH, Arbitrum, and then probably the first week of September we'll let everyone go full ham and be able to build markets on anything.
I like it. Tolga, you're unmuted. Did you want to say something?
Oh, I forgot to mute myself. Not too much. In terms of the flows, maybe just a quick comment. The hope with V3 is that we're going to be trying to bring in additional flows that might not have existed easily in the DeFi space. And one common thing we've noticed from like an evolution of some of the bigger DeFi players, just from talking to market makers, there's a significant amount of spot market makers out there who hold inventory of altcoins that can essentially create and spin up the option of markets, as DK was saying, for the particular assets that they hold, which is sort of an appealing aspect and something that we're targeting as another flow to come through and not just retail. So V3's biggest push from just like a higher level is to start creating or adding additional user types into the space instead of just that retail flow.
Super interesting. Cool.
Perfect. All righty, guys. I think we hit our 1 hour mark. I appreciate everybody coming on. Hopefully we can have you guys again and we can talk about your little black box you guys are building. And until next time, guys, it was good having you guys on.
Yeah, thanks for having us on, Marty. It's been great.
Thanks so much, guys. Thank you.
Of course. Have a good day.
Cheers,
Have a
guys.
good one, everyone.
Bye.
Bye.